If you had $100 million to invest in real estate, how would you invest that money? If you're sitting across the table from a hiring manager in an interview for a real estate investment firm, this is one of the most intimidating open-ended questions that you can be asked. There are so many things to think about here, and with so many product types and markets to consider, how do you answer this question to demonstrate how you think through the real estate investment process, and what can you do to back up those beliefs? Well, fortunately, you don't need to know everything about every market to answer this question in an educated way that helps you show yourself well during the interview process or helps you make better decisions on your own if you're doing deals as a real estate entrepreneur. So to help with figuring all of this out, in this video, we're going to break down 3 of the biggest things to consider when building a real estate investment thesis and how to build a framework for where you want to invest and what you want to invest in. So if you're choosing a target market to do your first deal in, preparing for an interview, or a mixture of the two, make sure to stick around for this video. Hey, this is Justin from Break Into CRE, and if you're new here on this channel, we talk about real estate investing careers and real estate financial analysis. So if you're looking to break into the industry or do your first or next real estate deal, make sure to subscribe to the channel and hit the notification bell so you don't miss any new videos as soon as they're released. So let's get back to the original question. If you had $100 million to invest in real estate, where would you invest it? And your answer to this question can depend on a lot of different factors, but in order to develop a well thought out investment thesis, you really only need to break this down into 3 main parts, which we'll walk through in this video. So the first thing that you need to decide on when building an investment thesis in the real estate space is the market or markets you plan to target. As you probably already know, real estate values are very closely correlated with their location, and how attractive a location is from a real estate investment perspective essentially boils down to 2 things. The first is where demand is currently outpacing supply, and the second is where demand is projected to outpace supply in the future. So in short, demand drivers in a real estate market can be summed up into the things that make residents and businesses want to move to a market. The biggest ones here usually include things like job growth, tax friendliness, a lower cost of living, and better weather, all of which lead to the biggest demand indicator in a market, net migration patterns. And net migration numbers measure the amount of people moving into an area versus the amount of people moving out of an area, essentially showing the growth or contraction of a market. So net migration numbers that are positive indicate that more people are moving to the area, while negative net migration numbers indicate that more people are moving from the area, which directly impacts the demand of essentially all product types in a market. Now, even if demand goes up in a market, according to basic economics, we also need supply growth to be less than demand growth in a market in order for rents and property values to ultimately increase. So with that, the second important piece of choosing a market is analyzing the current and future supply in a market, which is primarily determined by the current development pipeline and current governmental restrictions on new development and renovation of existing structures. Now, to find this information on new projects that are either planned or under construction, the big brokerage firms like CBRE, JLL, and Cushman & Wakefield are generally going to publish quarterly or annual market reports, which can give you some sort of an overview of projects either planned or under construction in a market. And if you're looking for more in-depth information or you're working for a bigger firm, databases like CoStar are going to have detailed information on what supply is projected to look like for the next 1 to 3 years. And as far as making projections about the future outside of the information that you can gather, general guidelines on building restrictions in a market and also the availability of land will help you make projections about what supply is going to look like in the next decade or 2 and whether a market is supply constrained or not. So for example, coastal cities like San Francisco, Los Angeles, and New York have traditionally been highly regulated markets, creating supply constraints and upward pressure on rents and values as a result. And at the same time, non-coastal markets like Dallas, Las Vegas, and Phoenix have historically been much less regulated and have a higher probability of being overbuilt towards the end of a real estate cycle, leading to supply outpacing demand and prices weakening as a result. The bottom line here is that a strong investment thesis usually involves investments in markets where demand is increasing and supply is either growing more slowly or staying static, and things like positive net migration and supply constraints in the market will make this a much more likely scenario. Now, once you've decided on your target markets, the next step in building an investment thesis is to choose the product type that you want to invest in. And choosing a product type is going to depend primarily on your research, but also on your beliefs on what the future looks like for the way people live, work, shop, and play. So, for example, right now, some investors are making big bets on remote work becoming much more permanent and widespread, while others are taking a different approach and assuming office needs will come roaring back stronger than ever. And some investors are investing heavily in necessity-based retail after seeing some really strong performance this year when the rest of the sector has been down, while other investors just won't touch the retail space because they're predicting even greater Amazon and e-commerce disruption in physical locations of things like grocery stores and pharmacies. And some investors are doubling down on multifamily, assuming that affordability will continue to decrease and the amount of renters by necessity will increase as a result, while others are backing off of multifamily rentals due to millennials beginning to get married and moving to the suburbs in larger single-family homes. The bottom line here is that you can really make a case for most scenarios and opinions regarding what you believe about what will happen in the future in many of these product types, but whatever you believe, it's important to back this up with research and facts and to support where you see those arbitrage opportunities in the market. This means that if your investment thesis is around buying hotels in the Las Vegas market, you should be able to talk to how long it's taken in the past several recessions for occupancy numbers to get back to healthy levels at hospitality properties across the country and how Las Vegas has compared to that time frame. And if your investment thesis is around repurposing opportunities in distressed assets to convert those to higher and better uses, make sure that you can back up those rent and supply statistics in that product type to support that decision. So at the end of the day, regardless of what stance you take, backing up your opinions with data is the most important piece of the puzzle when talking through any product type or product types that you're planning to target within that investment thesis. And finally, once you've decided on markets and product types that you're bullish on, the last step in this process is to come up with a business plan where you see opportunity in a market and again, be able to back that up with data. So if your investment thesis involves doing value-add apartment deals in San Diego, you need to have data supporting whether or not people are going to be paying for renovated units, especially during a tough time in the economic cycle. And if your plans involve renovating units and raising rents, will things like rent control restrictions be an issue in executing that business plan? And what are the restrictions around that? And to perform those renovations, what are construction costs today? Where are they trending? And how are they going to affect what you're trying to accomplish? Again, similar to everything else on this list, the key here is to make sure that there is data to support your decisions and to make sure that you can point to that data when talking through business plans that you find attractive in the real estate markets today. So overall, if you're looking to build a solid investment thesis, the 3 steps of this are going to be finding the market or markets that you're bullish on, finding the product type or product types that you're bullish on, and then being able to walk through a business plan that makes sense in those markets, in those product types, based on where you see opportunities in the market. And remember, whether you're doing this to prepare for an interview or you're building your own investment thesis to be able to present to investors or just decide where you want to invest your money, doing your research and backing this up with data is extremely important. And to do your research, even if you don't have access to a comprehensive database like CoStar, free research reports published by firms like CBRE, JLL, Cushman & Wakefield, Green Street, and even the Bureau of Labor Statistics are all great resources to find information on the key drivers that are really going to affect all 3 of the components of your investment thesis. So the next time you're asked what you would do with $100 million, by going through these steps and doing your research first, you're going to be able to talk through exactly where you'd invest that money and why you'd invest it there. So I hope this was helpful. If you're trying to build an investment thesis or preparing for an interview, let me know in the comments below what your real estate investment thesis is right now, what markets you like, and the product types you like in those markets as well. And once you're dialed in on a market and a product type, and you're ready to start modeling out individual deals, if you need help with building out your own real estate pro forma models for valuing commercial properties, or preparing for an Excel real estate interview exam if you're applying for new jobs in the industry, as always, make sure to check out Break Into CRE Academy, which will give you instant access to 19 courses on real estate financial modeling and investment analysis, access to dozens of pre-built real estate financial models and Excel exercise files, and some additional one-on-one career support from me along the way. So thanks so much for watching. I hope this was helpful in building out your own real estate investment thesis, and I'll see you in the next video.